Hello and welcome everyone to the week ahead commodity report, where we will be reviewing the markets for the week ahead. So first of all, what do you need to know as we go into next week? Well, in fact, we have had some breaking news over the weekend, which is regarding drone attacks on two plants at the heart of Saudi Arabia's oil industry over the weekend, which includes the world's biggest petroleum processing facility. With that, in the latest week, we've also seen hedge funds and money managers, they have increased their net long positions on crude oil in the latest week. So we'll move over to the charts and we'll have a look at crude oil very shortly. Before doing so, also worthwhile being aware that hedge funds and money managers, they have cut their net long positions in both gold and silver contracts in the latest week. Now we have the market focus turning to next week's Federal Reserve meeting and the FOMC statement on Wednesday, where the US Central Bank is expected to slash interest rates by 0.25% for the second consecutive time. So with that, let's move over to the charts and let's talk you through the major levels that we're looking at as we go into next week. So first of all, moving over to gold, we discussed this in detail on last week's gold asset of the day price forecast for the week ahead, where we were expecting a breakout back above that 1500 level and back towards the upper end of the ranges there, back towards that 1525 to 1535 zone. So what we actually saw last week was we broke down back into our buy zone there, 1485, 1495. We dropped down to those levels in the early part of the week, which is what we anticipated, and this is very common within the cycle of gold, where you do tend to form the lows formed during the early part of the week, and I'm looking out for that again as we go into next week, particularly before the open of the London session, which then sets up for a breakout later in the week. And of course, Thursday with the European Central Bank announcement is where we saw the big breakout on gold, but as always, you had to be very nimble. We actually banked 4 of our gold positions on that breakout to the upside there, taking a number of positions off the table, 200 points, 150 points, 50 points and so forth, as we continue to break out to the upside, taking our profits off the table with the breakout to $1,524 and then protecting our positions with a view to then buy back in lower. In fact, we did that again on Friday, buying back in, quick 100-point breakout for gold, and now what we've seen here towards the close on Friday is another retracement back towards the lower end of the channel. So right now, gold offers a lot of opportunities to trade it intraday, where you can take advantage of these cycles that we're seeing during the day, during the week, and also, of course, over the month. Now, typically the month of September, you do see a correction as we go into the FOMC statement, which is, of course, what we have next week on Wednesday, but then leads up to a breakout higher later on in the month. That's a typical cycle within the year before the US election, and also within the normal gold cycles as well, where we could see some strength come back into gold at the end of the month. That said, we do have a lower high and also a lower low on the weekly here with gold, which suggests that although we may see a breakout back above 1500 this week, we could very well also see just a rotation back towards the lower end of the channel, which right now does tend to reside around that 1470 to 1475 zone, bearing in mind that we broke down to 1488 last week, but then we could again just see another rotation back towards the midpoint, which could take us back to 1500 and then back towards the upper range around the 1515 zone. So essentially that's a tradable range we'll be looking at as we go into next week with gold. Gold was very lucrative for us again in the latest week, capitalizing on that breakout. Compliments of Mario Draghi there on Thursday. We're now looking to start building positions in the lead up to Wednesday's FOMC statement, where of course the Federal Reserve are anticipated to cut interest rates. And we want to see how the price action responds off the open, and of course keep a very close eye on oil as well, which will move over to that chart very shortly. I do want to point out that the gold to silver ratio, this has broken to the upside significantly in the latest week, which suggests gold is going to continue to outperform silver in the short term. You can see silver where it's broken down. If you look at the price action here into the close on Friday, we have closed almost at the daily lows here. So we have seen over a 3.3% decline to the downside on Friday, which again, the gold silver ratio is favoring gold upside versus silver at the moment, or if gold and silver are both going to sell off, silver will be the one to have the more significant decline lower. At the moment on Friday, we're seeing some support around $17.41 per ounce, but the next real key magnetic level for silver is going to be $17. That will be a very key level there, and that's often where you tend to see price catch a bid at these very key levels. In the same way that we continue to break out until we hit a magnetic level with silver, such as $18, then $19 and so forth, when we're breaking down like this, if we take out $17.50, which we have done, the next key level there would be $17 on silver to the downside if we continue to see some pressure there. And hedge funds and money managers, they have trimmed their net long positions in silver in the latest week. But don't underestimate Wednesday's FOMC statement to be a catalyst for big moves. So not only do we want to watch out for the confirmation that the Federal Reserve are going to cut interest rates, we also want to monitor future monetary guidance, especially given that we have 3 more FOMC statements between now and the end of the year over October, November and December, as well as next week's FOMC statement too. And of course, you want to be monitoring Donald Trump's response to the Federal Reserve as well. Trump has been very vocal again in the latest week with his dissatisfaction at the Fed and Jerome Powell for not cutting interest rates aggressively enough. So expect there to be a response later in the week against the Fed too after we actually get the FOMC statement on Wednesday. There will be more responses coming out later in the week with other Fed officials speaking and also Donald Trump's reaction as well, which can all have a positive bias there for the metals later on in the week. And then moving over to crude oil. So we have had this breaking news item about drone attacks on 2 plants in Saudi Arabia, one of those being the biggest petroleum processing facility. Now, hedge funds and money managers, they did increase their net long positions on oil in the latest week. Oil has been very profitable for us over the latest week. So initially we were on the buy side of the breakout here to the upside, capitalizing on a 480 point move with Brent crude oil, and then we took the sell short as well last week, hitting our profit target for 368 points profit on our sell short. So now going into next week, we are looking at fresh opportunities here for oil. Now, given this breaking news item, we might well see a gap on the open here for oil, and we're still at the lower end of the range for both Brent and WTI crude oil. So this could actually set up for a buy opportunity for the price action to drive all the way back up, back towards the upper end of that channel. Of course, closing at $54.82 per barrel. First of all, you'd want to see the price action break above $55 per barrel and then start to make its way back towards the midpoint of that range, back towards the 57 zone, and then of course up towards the upper range, which is $59 per barrel. That's the range that we're seeing right now for oil. So this is what I would keep an eye on going into the early part of next week. Hedge funds have increased their overall net long positions. We've got this breaking news item over the course of the weekend. Just bear in mind too that if we do see a gap on the open and that drives higher, often gaps can get filled. So you want to be a little bit careful here. Sometimes you can get better entries if you're a bit more patient on some of these moves. Obviously, if we gap up 200-300 points on the open for oil, you don't want to jump straight into a trade where you could get a better entry if you're a bit more patient on that position. Let's say, for example, oil doesn't gap on the open and we consolidate, and in fact, rather than rally, if we were to see any sort of further pullback here on oil, the key magnetic levels again are going to be around that $53 per barrel handle, down towards the $54 per barrel level as well. These have been very key in oil getting supported over the last couple of weeks. Oil has been a fantastic range bound market, buying in at the lower ranges, taking advantage of that rally back towards the upper end of the trend channel, and then selling short, taking it back down again. It's been very straightforward to capitalize on these moves here with oil whilst it continues to range sideways. Normally the month of September is supportive for oil, and over the course of the month there is a net positive increase in oil prices. However, we do normally see this pullback in mid-September that we're seeing at the moment, so this could very well set up for a nice buy opportunity going into next week as well. We will be keeping you updated with both gold and oil asset of the day as we go into next week. We'll be going through our forecasts, our levels, and all of the latest developments in the market in more detail. Also, if you would like to learn a research-driven approach where you're able to anticipate market sentiment, trade flow, the smart money in the market, and you're marrying that up with fundamentals, seasonal cycles, and geopolitical news in order to then generate a trade idea that gives you edge, then there is an opportunity for you to join us at the Gold and Silver Club. As a member of the Gold and Silver Club, you join a community of successful traders and you have access to our exclusive live trading room webinars. You get access to our real-time trade alerts, real-time trading research and market insights, access to our private Members Academy website, and also support and one-to-one mentoring. For more information about the service, please just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.